Good afternoon, George Cavaligos for HFT Bonds and Notes. Kind of an odd day. You know, stocks are down quite a bit. Notes are up 4 ticks. Bonds are up 14 after making new highs in the bonds again and not making new highs in the 10-year. You know, we talked about it a little bit in the chat room, you know, when we were up there, and how the volume wasn't, you know, really doing much. And then, you know, stocks turned around and rallied back off their lows, which, it's interesting, we took out Monday's low in the S&P by a tick. Kind of at the same time, I think we were making new highs for this last move up in the 10-year by half a tick. I guess 09 was the previous high, went to 09 plus. I think at that point there was a couple times where bonds were making 1 tick higher highs, and this stuff all just reeks of range trading type activity. So I guess we got to go back to range trading mentality, even though we were kind of looking for this rally, didn't pick up on enough of it, I guess, is what I'm trying to say. We should have had more. And now we're kind of in this, like, what, 3 steps forward and 2 back, 3 steps forward, 2 back, you know, that kind of trade. And it's a tough trade if you're looking for a trend. We're not trending, I guess, is what I'm trying to say. So buy dips, sell rallies. You know, keep an eye on the volume as we're approaching previous highs and previous lows. If you see the volume really start to pick up, go with it. Don't fade it. If the volume isn't picking up, fade it. And that was my big mistake today. I didn't fade the highs in the treasuries. Sorry about the focus, guys. I don't know what's going on there. The move off the highs, we did you know, a lot of overlapping of previous highs. That takes away some of the impulse factor. I just posted in the chat, I think you just got a range trade mentality here, and just keep that mentality until we break out, and keep your fingers crossed that we do get some kind of breakout. You know, Kevin and I were just talking about maybe that won't happen because of what's going on with the Fed and the BOJ and all these guys doing all this money printing. And, you know, you're giving money to the big players for free, and all they're doing is taking that free money and flipping it, you know, buying stuff, and as soon as it makes a profit they get out, and then, you know, everything turns around. I don't know if that's what's driving things, who knows. It's just not a normal type of environment from what we're used to in the past. But you know, we never had QE, we never had the debt levels that we have now, we never had the unemployment levels that we have now. There's so many diverging and I don't know what the word is. What am I looking for here? Not bad, but just big things going on that markets are susceptible for reversals, I think. So, like I said, buy dips, sell rallies, keep an eye on the volume. I guess, what are we looking for in the bonds now? 140. 720 to 24 on the downside, and 148, what, 10 on the top side now? I don't think we'll get above 20. That was the early high. We do have like a big kind of, you know, area where we did not trade a lot of volume between 148.10 and 148.12. So I kind of think the market can go up there and fill in that low volume area, but I don't think it'll run much from there. So try to buy it, you know, 147.20, sell it at 148.10. Not much, but that's all we got. Have a great night, guys. We'll see you tomorrow.